7th episode of the Trading Pit. I am your host, Mark White, back from a 2-week hiatus, welcoming new life into my second favorite planet, Earth. On today's show, Benjamin from JLabs returns to take credit for correctly calling the price breakout last Thursday, explains what the whales are signaling next. After that, Amit, the range sniper, joins us to look at Bitcoin, Solana, AAVE, and even Ethereum to discuss whether there's some possible entries, exits, and much, much more. Very glad to have these gentlemen up here, but let's start with some rapid fire, get them warmed up, at least for you, Benjamin, because you're going to be on the hot seat. Are you ready?
Yep.
Wow, there's the enthusiasm I've come to miss. Gone. MSTX, a 1.75x MicroStrategy ETF. It got $127 million after 6 days. Is this a bubble or bull signal?
I'm honestly shocked seeing that data actually. So to me, it feels like, I mean, you have MST already. Why do you need another ETF? And why is so much money coming in on another ETF? Which basically means that there's a lot of money still in the market.
In a world filled with degens, you need more leverage, more and more leverage.
Yeah.
Okay.
I think it will continue. I don't think it will be a bubble that blows right now.
All right. The bubble isn't going to burst right now.
It's probably going to get bigger. Let's see.
Okay. Let's see how fat it gets. Well, the next question. Degen traders want to know 58K or 70K first. Wow. This is rapid fire, not slow-mo. What are we doing here?
Right. Yeah, I'm just thinking.
That's
a very
tough question. Pass.
No pass.
Okay. We've moved on. Okay.
I think 70K. I think 70K.
You think 70K first? All right. Well, the degen traders are going full leverage on that. They're probably putting their life savings into the MSTX to see if they can get some money after that. All right.
Are they also selling their kids and wives and doing so? Because that's what CT basically recommends.
Wow, we got some great advice coming here on X. Next and last question. The first Fed rate cut is expected in December. Is it going to be a price mover or a non-event?
It's expected in September, right?
It is.
Yeah. I think there will be volatility. I think we will drop.
All right. So it's going to be a price mover. It's going to do something.
Yeah, it's going to be a price mover. 100%.
So it's not all priced in?
No, it is priced in, which is why I think we will drop first.
Okay. They're expecting more of a catalyst that doesn't come and materialize, and therefore they're going to...
My suspicion is the market is starting to price in a 50 bips cut, but we get a 25 bips cut, and that's in line with the expectations in a way, and the market basically corrects quite a bit. I do not know how big of a correction because it depends on where we stand, but yeah.
Well, I want to hear more about where we stand with you telling us a little bit more about the whales. Those who tuned in last Thursday got a masterclass on how to dissect where these populations of large wallets are going, how they're buying, the patterns that you're seeing, either if you're looking at CVD or if you're actually looking just at pure accumulation. And I want to continue off of that because on that conversation you had with Ben Lilly, you broke down exactly what you were seeing in Bitcoin, that the whales were starting to accumulate, what you saw from a CVD perspective, and what you thought may happen if we were able to break out, I think, above the 62K range. You said it could go all the way up to 67K. This morning, as I look at some of these numbers, Bitcoin is sitting at 62,000, Ethereum back at 2,600, and Solana at 154. You'll have to forgive anybody because it feels like if they had gone away in August, the numbers would look almost identical. Nothing seems to be changing. We seem to be in stagnant air, so to speak. But last week, you talked a little bit about what the whales are doing. Break down exactly what you've seen since last Thursday, what the whales are starting to do, because then I want to talk a little bit about where they may be going next.
Sure. Last week, when we had the call with Ben Lilly, we were somewhere around here, I think, and over here, right at the verge of a breakout situation. And there's a lot of discussion about Are the whales buying or selling? Where do we stand? It's right at the resistance. Should we be scared? And at that point, I introduced a discussion about the trade count in the 1 to 10 million range, where we did not see much of activity after the 20th of August. So it's just been consolidating right below the 200 moving average on the 4 hours. And my thesis was and is still that when we see a large activity from the Binance whale right into a buying pressure or a selling pressure, then we can deduce whether it's a local bottom or it's a local top, and if we see a correction. And a day later, we just broke out and right into the 65K zone. We saw a big Binance whale basically come in and sweep in into the selling pressure, bought a solid volume into the selling pressure, right into the selling zone in 64 to 65K, which basically just marked the local top. And then over the weekend, we also received additional JAI alerts on local top around 64,500, 64, 63,800. I think we received like 3 alerts of whales additionally selling into the resistance on the on-chain side as well. And all of those things basically marked the local top. We also spoke about it in Oculus and recommended the users to do some risk management at that spot. And since then, we have just been doing a very slow bleed, like extremely slow bleed, despite the US futures markets opening up on Sunday. What we see right now is that the bid ask ratio is getting stronger. There's new bids that have come in the 62K range to 61,500 range. So I expect that price holds up over here. We also see a large Binance whale trying to sell over here into the bid books, which means this probably is the trap spot for it's a bear trap, is what I think, locally at least. And
Mhm.
potentially this yields up in a bounce. And then we have to see how well the bounce is, or is it going to come back down to 61,500. But right now we are also getting closer to the 4 hour 200 moving average. There's also a support level at the 61K zone. It is still worrisome a little that we did not get much of retest trying to break into the 65K zone, despite the
Break,
local top signals that we got.
yeah, break down why that's worrisome to you. Why were you expecting the bulls or the whales rather to be a little bit more aggressive in going into that zone?
Because we flip that zone, we can solidify the support above the 200 moving average, number one. And then we would have basically flipped all the important anchored VWAP levels of 2024. And that would have been a solid zone for bulls to be in control. But we did not clear that. So that was, I did not expect that we'll clear it in one go. But
Mhm,
I'm
mhm.
also disappointed that despite 3 days of consolidating in close to that levels, like we are going back all the way down to 62K, which is all right, but ideally, if we are quite bullish, we should not be retesting anything below 62K. We should be front running that zone because, shots, there were a lot of shots below 62K. And I know for sure a lot of people have been adding up to their shots because they think 44K is coming. So it would have been very easy to squeeze them all out. If we cleared 65K, it could have basically run up comfortably to 67 or even 69K. Is quite comfortable because there's quite a lot of shots who had come in below 62K level, and a lot of them were still holding. So that is why you do not want price to come back to those entry levels, because you are giving a free pass to those short sellers to get out. So now the question comes in, if we also close today on the daily level below 62K, then basically this pump was a deviation. and we are probably going to have to go back down and retest. That's why today is very critical. Yesterday was not a great close on a daily level. On a weekly level, it was still a fantastic close. We
Mhm.
recovered a lot of resistance levels, which is great. But on a daily level, it wasn't that fantastic. So we have to wait and see a little. I think it is also got to do with what's going on the macro markets. Russell 2000 is retracing a bit. Nasdaq and S&P 500 are retracing a bit. So there's a
Yeah,
bit
we
of macro correlation.
I did catch some of that activity coming off of that, but I want to bring us back a little bit to the whales. You mentioned a 44K range, or looking for some people are looking to position much lower than we've seen over the last really 6 months. What in the data is suggesting that they may actually happen? I mean, specific from a whale perspective, as you're trying to really unlock those patterns, is there something that's suggesting liquidity is starting to build up around those levels?
No, because it's not here in Panda Terminal, but we do track a few additional data on the bid-ask side of the entire order book across exchanges, and we have not hit alarming levels in order book liquidity over there. So I don't think this is basically the correction which leads to a correction all the way down to 44K. Not yet, at least.
Mhm.
But if those parameters change, then obviously we are going to be alerting our friends in Oculus, and they get to know so that they can make some corrections about it. But right now, it doesn't seem to be the correction that leads to a 44K type of a drop, or let's say even a 50K type of a drop. Um, so we have to factor in the price levels and the books liquidity. So far, it's still chop. It's still just
Yeah.
driving people crazy. And
Well,
if yeah,
it sounds like that's where JAI was really signaling, right? That you had this thesis on Thursday that said, "Hey, I think if we can break past this resistance zone, perhaps get into the area that you said acted as resistance just over the last couple of days, we should see something going all the way up to 67K." JAI came out and said, "No, we're seeing some local top patterns." Do you have any more insight on what exactly JAI was triggering or seeing that
no,
suggested why those local tops were happening?
actually, we had a few metrics basically bring in confluence. We have a metric called degeneracy index, which basically talks about which basically indicates when the market has gone full on degenerate, but into a particular bid ask levels. It also factors in the order book situation before it basically indicates. And then there is another additional sweet sauce based on on-chain transactions at that spot, which is based on dormancy of wallets. So if old wallets basically unlocks at certain specific instances, so there has to be a confluence of multiple these metrics, and then it will basically indicate a local top situation. So it's very
Mm.
picky, it's very rare, it doesn't all happen like on every swing, every local up and down. It doesn't work that way. But when it does, it's something that we have to 100% pay attention to. And we had nearly 3 alerts all the way into the resistance block, as we see. And then basically price has retraced from there. We don't have any buy alerts on that front so far. But the
Okay.
way I look at um, the bid ask ratio, the book liquidity, and the trade behavior, it is possible that we are very close to a local bottom. But how far the bounce is going to be, or if this is the bottom that leads to the run up all the way to 70K, that I do not have sufficient information as of now. That's primarily because it's not purely dependent on what's happening with the order book liquidity or trade books
So
in
I
Binance. It's also about macro. So
sure. Yeah, and we there's a lot we could break down on the macro front, but we'll stick to our circle of competence right now. I want to go back to those two other metrics you mentioned that JI is going to be looking at. It sounds like those are really trying to see kind of anomalies patterns that would start to pick up once the market starts to move. You mentioned the degen. That's almost like the people that are waiting on the sidelines to deploy some capital. Uh, that are looking for some kind of movement in the marketplace. Once that starts to pick up, those degen players are starting to jump in. And then the same thing with the dormant wallets, right? They're sitting on the sidelines waiting for some kind of movement. If they take action, then JI says, okay, this could mean that the riskiest players or participants in the marketplace are starting to jump in. This is a good time to de-risk. Is that an accurate description of that?
Yes, that's a well put, accurate description. We have to add it in the docs the same way you have mentioned. To be honest, that's the exact way to describe it.
Okay. All right. Well, even sleep deprived, I can have a few good thoughts. That's good to hear. Talk to me a little bit more, because I listened to the good conversation you had with Ben last week. You talked a lot about CVD divergence. You talked about whale wallets that you're tracking. You just mentioned just a minute ago that the whales that you were looking at from a Binance perspective, the activity that they were doing, it sounded like it was perhaps one major wallet. Do you see any divergence or distinction between the size of the wallets that you're tracking from a whale perspective and maybe how they're positioning right now? Are some doing some accumulation, some are flat, some are selling?
No, right now, based on the on-chain side, we're not seeing any divergence. But on the order flow side, right now, as we speak, we are seeing a divergence basically form. If we notice over here, there's a bit of a selling activity starting to pick up right into the uh, fat order book, but it has not got confirmed yet. So we have to wait for that trade to get fully filled. So it's still getting partially filled. That's why it's still um, unconfirmed, I would say. But if we do get a confirmed large sell right now into the books, then for sure this could be the bad trap.
This could be the bear trap. It's exciting times, right?
Yeah.
Well, I guess the last question I have here, that at least immediately come to mind is you talked all the way back in May, you said sell in May and go away, right? We're now sitting, getting closer to the end of the summer. As we look at sort of the patterns that are starting to build, you've everything we've talked about feels like it's on a very short time frame. What's your expectation for how the whale patterns may start to move going into the next couple of months? Especially, I mean, we talked a little bit at the start of the show about the potential Fed pivot, which I don't want to get into that too much. That's really just pure speculation. But a lot of the whale patterns seem to be based on historically what they've done it almost seasonally, right? As these whales
Yeah.
start to migrate through the oceans. What would you expect to see as we start to move into the next quarter, moving towards sort of October, November, December, the end of the year?
Well, my expectation is that post mid-September, we probably see a huge bullish divergence on the on-chain accumulation side. We probably see a lot more whale wallets starting to accumulate compared to the inactivity we see right now. Um,
And
so
what
that
makes you
should
say that? What,
increase
yeah, why should
because it's
that
always been
increase?
the case. It's always been the case. Almost every green year, we have seen towards the end of September is when on-chain divergence starts to pick up. Even if it is short term, we see that happen pretty much on the whale wallet side for years together, if it is a green year. So, of course, the argument is now whether this is going to continue to be a green year or not. But I do think it is going to be a green year. And I don't see a reason why something shifts unless there is something else fundamentally happening that we do not know.
So really just a continuation of those seasonal patterns. It's like the whales really do like to migrate from place to place. Is that something that you've taken from TradFi? Are you seeing some of those patterns that would come over from TradFi into crypto? Is that just unique to crypto?
Now that becomes too speculative to say there is a correlation.
Mm.
Although BTC is not a stranger to such type of correlations, but I'm rather not choosing to go into that argument uh, because I'm not sure if that is true or not. But just based on our patterns, like mid of September onwards, there's slow accumulation that starts on the whale side, and it goes all the way up to October, and then towards the end of November till January, on an averaging basis, on a multi-year average, you can start to see slow distribution start to happen on the whale side. That's when you see retail also pick up in the wallet level, and then uh, then it's basically the market. Then it depends on all the retail longs, all the whale longs on the Binance future side, BitMEX, and all these exchanges where the dominance of derivatives comes in, and then it is a different story. But on the shifting of the seasonality side, I think we will see some activity only post mid of September. I don't think we'll see something too significant right now, because there has still been some whale wallet movements, dormant wallet movements. You don't want that to typically keep happening. So Q3 has been, I would say even Q2 has been filled with multiple such dormant wallets basically moving along. We do not know if they are basically going and buying an ETF or not, but they have been rebalancing, they have been moving along. So I think that's also reflected for us quite much in prices.
Hmm.
And that behavior should typically shift post mid of September.
So could a trader look at this and just kind of sit on their hands until they get a definitive move over the next couple of weeks, and then really start to accumulate in the September timeframe, looking for some kind of real well movement over the next couple of, I guess, through the end of Q4?
Yeah, to be honest, I don't think we'll see some drastic breakouts for another 30, 40 days either. I don't think the market is ready for it. I don't think um, altcoins or anyone is ready for such huge movements. We are probably going to see some more announcements and all those things come in. But I don't think the market is ready for a run up to 100K yet. But I don't think the market is ready for a drop to 44K yet either. So we're just going to continue the chop. The books show no indication of themselves preparing for a huge move of more than a 10%, even if it is so. So that part gives me a bit of confidence, and like, it can help us define our hedges in time. So right now, I
Hmm.
don't think anyone should bother much. Just link in with the algorithms and just let it do the job. Like, take it slow, take it relaxed.
Yeah. Well, I'm going to be bringing up Amit here in a moment to talk a little bit about some of those ranges you may be able to trade and squeeze out some profits while we continue the range. Last question. I said that before, but I am coming back with another one. How do you look at this from a whales start to move, right? They start to show some of these patterns in the chart to where we actually start to see the larger breakout, the larger movement? Is it a multi-week ahead of time? Is it multiple months ahead of time? Like if we start to see some of this activity in September, are you then expecting to see something, let's say in the December timeframe? It's that, kind of a
Yeah,
3-month
I
delay.
typically I've seen like a 30-day time of accumulation.
Okay.
So like it starts if the patterns start shifting, then it's basically 30 days you get. Sometimes it's a little bit of a vertical accumulation, sometimes it's a sideways accumulation, but 30 days is where typically those accumulations happen, and then you have the expansion, and those expansions are typically quite like wild, like really explosive. So for now, the hope continues that we will see the same pattern happen again, and when that happens, we can be a bit more confident about what to come for the next 6 to 8 months, perhaps.
Hmm. Okay. Well, this is a good breakdown. I think there's the mindset, particularly on X, Twitter, where they're always looking for the whales to be making moves very quickly, kind of week to week. Sometimes it sounds like weeks. You're just kind of waiting, monitoring to see if the whales are going to move. You mentioned that there could be some buying that could signal a bear trap just in the next couple of minutes that goes through if the orders actually go through and we see those realized. But for now, it's a little bit of a wait and see.
Yes.
Okay. Well, anything else, Benjamin, you'd want to share from a whale perspective before we move on and look at some trading opportunities with Amit?
Overall, they are still on a choppy zone. They are playing local swings, of course, small ranges, but I don't think the whales are positioned enough for a large move, um, whether it is to the upside or downside. So it is still a very choppy market that's going to continue. Do not expect for too much of resolution, whether it is BTC or any of the other tokens. There's not going to be much of range resolution, in my opinion, in the short term.
Okay. Well, I wish you could bring us even better news with breakouts well above recent all-time highs, but the facts are the facts. So Benjamin, thank you for dropping by. Appreciate it. Amit, we're going to transition over to you. As we do that, I want to take a moment to tell all of our listeners out there, you guys have been with us a while. Maybe you're brand new. You just joined us in the last couple of weeks. Maybe you've been with us over the last year on this journey. We've been going down to share information. Regardless of where you are in the journey, there's an exciting offer that is on the table now that just was mentioned last week from Ben Lilly. If you're interested in getting access to the JAI, the AI system that is doing the automated trading that can trade at night while you're sleeping in bed so you don't have to become a degen trader, you can do that now. And if the producers can pull up the link, it's really, really, really simple. You go on Telegram, you DM the link on Telegram, and then you can start to get set up with the JAI bot, which is trading on Bybit. And there we go. It's Jarvis AI sub bot on Telegram. And we'll be talking more and more about that on this show, just the capabilities for what it can do. But also bring it up. But definitely check that out. There are a couple of requirements. I'll leave those in the DMs. I don't want to go through everything there. But it's the system behind everything that Benjamin's talking about. It was doing the local alerts and local tops, called that correctly. And it's got a great track record, helps you sleep at night. Something to consider for anybody who's looking to continue to grow their nest egg in the crypto space. But with that, let's move on to Amit. Amit, are you with us?
Yes, sir.
Okay. Wow, you brought the enthusiasm that Benjamin wish he had. So there's going to be a little bit of a competition going forward. I'm going to see who can really get the jewels going on the show. I want to ask before we get into this. Don't have any hot topic or hot seat questions, but given what you just heard about the whale wallets kind of sitting in an accumulation pattern, what are you thinking right now about Bitcoin?
I think whales will be late to the party this time.
Oh, so you think it's the crabs, or I don't know, what are the other animals that we're looking at for this? The squids, the octopi?
Everybody in between.
Everyone in between. Everyone in between. All right. Well, we didn't talk about it just in the last couple of minutes, but when I looked at the ETF flows continue to be really, really strong. I think we had a good close last week. So break down what you're looking at BTC right now, while you're making the case that the whales are going to be late and maybe a little sour.
Yeah, I think if you can see my screen, right? So
I can see it. It's beautiful. Lots of lines.
All right. Okay. So these are the levels that I've been tracking. So this is the mid-range at 61,800 is basically the pivot point for me on a higher time frames. Because if that is given what happened on Friday, it was just when Chair Powell said there is a time to change the regime. This was this candle running up straight up. And then there was expectation, there was a bit of a sell-off that would come, and then it will go down on the sideways on the Monday ranges and form it. So this is exactly what I expected. Monday range to form, and then it start to run up. Now, if you start looking at the funding rates and the open interest, it's getting very interesting. So if you put these things together, right? So we have lost the Monday low. Generally, this is what happens. So when you come down to Monday low, this gets retested all the time. So this makes basically your kind of a rounded bottom. This is here, and this is exactly what it did here. So I think this is it, because the reason I say this is A, we got a positive funding rate. B, open interest is slowly going down. C, your bid ask ratio is bids are kind of 120 mil to 90 mil or in favor of bids, and your ratios are getting positive. And this was the liquidation level as well. So this was it. So all in all, this is shaping up to be, and again, there is a lot of support coming down at 61,800 on the spot level. So this is shaping up to be kind of a rounded bottom again. So the way I would trade this is basically if the Monday high is reclaimed, from that point onwards, basically I'm getting into the trade slowly. And Monday low basically being, that's your quarterly open as well. So 62,700 you can take a small trade, start entering from that point onwards, because that gives you a clear invalidation point at Monday low. And then if that gets held, I think we are looking at 6,700, 67K, sorry.
Break down two things. The first you talked about is how you typically see that sell off on Monday, and you start to see that pattern, almost a cupping pattern that you're starting to look at. Do you have any insight into why that happens, or do you not care and you're just looking for a recurrence of that pattern, basically every Monday, to tell you what might happen in the week to come?
I think we ran some stats on it, and it's 67% when Monday lows are held, it goes up to Monday high, and then starts making higher high from that point onwards. So generally, that's a pattern. If you have a run up on Friday, you will see a sell off on Monday. That will try to form the range. So, and again, Friday being Friday shenanigans, that always happens. So I never trust the move that happens on Friday. And Monday being the ranges, it becomes much easier to trade. So statistically, if Monday low is held, then there is a very high degree of chance, about 67%, that will go up to Monday high.
Okay. That's a good starting point. Break down a little bit about your thought process around the closes. And we obviously we have the weekly close, then we've got the monthly close coming up this week. Then we've got quarterly closes that you're looking at as well. How are you thinking about triangulating around those, the significance of them, and what are you looking for right now?
So currently, I mean, I draw those levels on the chart just to as a reference point, because you can see this was the quarterly close where we had a significant sell-off, and this was the monthly open where we saw the significant sell-off happening. So if we are reclaiming these levels, like if we can reclaim the quarterly open that is sitting at around 62,700, that's the good start. And then going up to the monthly open, if that happens. If it doesn't, then we are looking at basically down. If the sell-off happens here, there is a, if 61,800 breaks down, then we are looking at sell-off at 56K.
Okay. That seems relatively clear. What about from an order book or order flow perspective? Is that factoring into what you're looking at here when you're trying to do the setup from a Bitcoin
Yes.
perspective?
Yes. So order books, specifically on the spot side, there is a lot of support sitting at 61,800. And bid and ask ratio, if you look at currently at current state of play, bids are kind of 150 mil to 90 mil to asks. So there are a lot of bids coming in, and that makes it looks like, and it's going to move up. So this was basically filling the bags before it have a second run up for the week.
That seems rather positive. I like that.
I mean, it is
like you said, a little bit different from the whales that sort of be on the sideline. It seems like the smaller players are starting to make a play.
When this kind of move happens, these kind of moves happen, right? Because whales are basically from 55K, you straight go into within a day, you are sitting at 61K. So I'm see from the whales perspective, they are looking at 70K, 80K move. But I'm not playing that moves. What I'm doing is I'm slowly consolidating 5%, 10%, or even 3 to 5%. If I can book that profit, I'll play for the second range. So for me, it's always compounding. I'm not looking at what whales are doing or basically how big a X you can get. For me, it's percentages. If I can get 3 to 5 percentages, that is good enough for me, because I work on week basis.
Yeah. Got it. And this is really, I mean, when we talk about this on this show, this is really sort of what you're trading, right? What you're actually doing on your individual account, right?
Yeah.
Yeah. Okay. I want to clarify that for people. I know sometimes there's some questions about that being trade. There's JAI that's trading, that's the autonomous trader. And then Amit, what you're sharing here is really just your own opinion and analysis of the market and how you look at it from your own account. Okay.
Yep.
Fantastic. Okay.
I mean,
So
just to cap on that, there are a lot of things that goes into JI. I mean, it's completely autonomous and it's kind of a beast. So it's not just looking at the trade ranges or the percentages. It's a holistic view of the market. It covers what Benjamin said. It looks at the whales, it looks at the order flow, it looks at the ranges. So it covers the holistic view and then start taking the trades. So this is just me looking at saying, okay, what the market looks like.
Sure. Absolutely. Well, so can you just kind of recap what you're looking at from the actual price points and the invalidation that you were looking at from a Bitcoin perspective? And then I want to get your thoughts on some of these other tokens to see if maybe there's a trade there as well. But just recap sort of what you're looking at from a price perspective.
So from price perspective, I won't take a trade just now. So 60 to 700 is where I will start getting in, because that's over my Monday low.
Mhm.
And from that point onwards, I'll start taking the trades going upwards. But if 61,800 breaks down, if you are in a position, we'll start looking at basically what to do with that, because 61,800 is the pivot point for me.
And
But
I mean, just on a pure tactical level, are you placing stop losses below that? Do you find it easier to manage just being at your computer the whole time? How do you manage that risk?
so the way I manage it, basically I set up the alerts. Doesn't matter what time it comes. I don't put the stop losses in. Reason being is you get hunted most of the times if you put the stop losses in. So generally, I mean, I have a view in mind because I'm looking at higher time frames. I'm looking at 12-hour intervals. So when that happens, I have a bit of a time to make a decision. And then I go and play the market based on whether it is what the books are looking like, whether it is bullish or there is a complete break in the market structure. If it is completely broken down, then you take the loss. If it doesn't, if there is, I don't try to catch the knife, to be honest. If it is breaking down, if I'm in a trade, try to get out of it.
So typically when we look at these patterns, right, it starts with Bitcoin, then it moves on to the majors. You have Ethereum, you have Solana, and then it moves on to the rest of the market, such as AAVE. What are you looking at for those? So we can start with either one. You just pulled up one that looks like Ethereum. Ethereum's got some really interesting information, but I don't think you care about that. It's all about the numbers.
Not
What is
really.
Ethereum telling you?
Ethereum, this is where I was thinking before we started the chat, or before today, right? This is where I was drawing the chart in the morning, saying this is where I would start thinking whether I can go long on Ethereum. It looks like it's coming heavily into that range. So it's basically looking at what ranges look like. This is basically a local bottom for me, 2,500. So if this is held, then there is a chance we might have a run up again from 2,500 to 2,700, because this is a very solid range where a lot of consolidation is happening.
Hmm.
So
When you say held, are you looking for a daily close to validate that it's actually held that? Are you looking for something more significant or?
Monday lows, again, same setup, Monday lows.
Okay.
So if there you go. We've broken through the Monday low, said that I'm not looking for longs just yet. Once the Monday low is reclaimed, then I'll start to go up. If not, I'll stay out of it.
That seems fair enough. What do you care at all about any of the discussions that are happening on X about DeFi or whether or not it's going to be overtaken by Solana? Does any of that matter to you?
No, it doesn't. Reason being is because whatever is happening, it will get reflected on the price.
It's
So there is
not
no-
getting overtaken by Solana. Solana had 0.1% pool yield on Orca basically in the past couple of days. That's much lower than Ethereum. Had like 76 million of trading volume on the pool on the Orca DEX. Like, come on, you cannot talk about, I mean, these people who talk about flipping Ethereum in perfectly, I laugh about it. I still think Solana will be a dominant player, but flipping Ethereum, yeah.
not going to happen. Not going to happen.
Yeah.
So Ethereum might be, I mean, there's a lot of discussions happening on X, because that gives you a lot of distraction, because that's where the doubt starts to come in, right? Any discussion that is happening around me, right? The only person I can speak to is Benjamin and say, what are the whales doing? What do you think? So this is the sort of discussions we have. But outside that, I don't go on X because there's a lot of contradictory information sitting there. So anything that happens, what I'm saying is, gets reflected on the price. And then I don't have to catch 100% of the move. If I can catch 75% of the move, I'm happy.
Yeah, I was going to say X feels like an emotional distraction engine. That's just give me all kinds of poor signals, even if sometimes you can find some good ones. So it looks like Ethereum, if it can hold this area, you're saying is a good long position. To clarify that for some people, that's not a buy and hold. That's a buy and trade. What is the time frame you would be looking at? When would you be looking to exit if it's able to hold this level?
So if it holds this level, I mean, the way I would trade is I will basically slowly build up the position, because this is not a good range to get in. Basically, I want to see a reclaim of this higher level, 2,600. And from that point onwards, once that is reclaimed, take a 50% TP at Monday mid and then rest of it again 30% TP at Monday high, then let rest of it runs. And then come back on next Monday or Tuesday morning and start looking at the ranges. But I won't basically take a trade and let it run to 4K.
Mm-hmm. Well, that's what a range sniper, that's your new moniker. So that looks like exactly what you're doing. Are you happy with this? You know, just a couple of weeks ago before I went on break, you were talking about how you were disappointed in Ethereum. It didn't look like a good place to trade. Now it looks like you've changed your tune. It can happen that fast, huh?
Yeah, I mean, there are signs of life on Ethereum now. It seems like it is ready to make some moves. So yeah, I mean, it's basically me looking at the screener and looking at the metrics and whatever, because the whole point being is looking at the screeners. I'm not putting any bias into it. Whatever I see it, if it's on the screen, if it pops up on the screen, then I'm happy to trade it. Look at the ranges, once the ranges are clear, then start looking in what the order book says, what the order flow says, how many trades are coming in, what the trade count is. If everything looks good, take a trade. Why not?
Hey, why not? I love that. All right. So we've looked at Bitcoin. We looked at Ethereum. Both of them seem like they've got some interesting positions to front run the whales. Tell us a little bit about Solana.
Solana, right. So this is the trend line that I've been following for a very long time, right? And I was very happy, like we were able to flip that trend line. Now it flipped again. So again, it is at a very interesting section here. If again Monday low reclaims, start taking up the position, because I think if the Monday low is taken, we are looking at 175.
You think the position can be that explosive?
Yeah, because if you look at it, won't take long. If you specifically look from the Solana side, right, it moves from 140 to, let's say, we are 160 within 1.5 day. So if you take just that calculation and put it on top of it, there you go.
Well, that seems easy enough, but walk me through what you think when you're thinking of this. I mean, it's great to have some technical analysis to suggest sort of what these ranges are. What about from an order book or order flow perspective in the depth? Because we know that Bitcoin, Ethereum, and Solana are not all created equal with the amount of volume that you're seeing. So, specific to Solana, knowing that it's a much smaller asset class or asset, how do you think about that? Does that factor into whether or not this is a good a trade versus, let's just say, Ethereum?
Yeah, when it comes to Solana, right, there is a level of order book information that you want to capture, but the rest of it is basically spoofing that you see on the order book. So if the way you have to see is basically you have to put everything with respect to BTC. If the order books on the BTC are strong, but if you don't see anything on Ethereum, if the order books are still empty, it won't make much of a difference, because when the BTC starts to move, the rest of the things will start to move with it.
So you're saying the pattern will really flow. It's almost
Yes.
like an avalanche starting to happen. If Bitcoin can start to make some move, the order books will strengthen. Is it really that pattern? Is it really that predictable, where it's Bitcoin, Ethereum, Solana, and then others?
Not specifically Ethereum lately, but Solana is.
Interesting.
The bottom is always from BTC,
right?
And then the first runner is Solana.
Yeah.
Then the rest of them run. So that's how we typically see in our daily discussions as well. We look at WIF and what is that other one? WIF and Pocket.
Okay.
So I look at those two tokens as a signal of strength for Solana, and if Solana is too weak, even if BTC is a little strong, that makes me doubt the whole deal on the green side, because it is where still degeneracy lives. There is still a bit of liquidity, and when that goes basically inactive, you have to question everything, right? So
that's really kind of
WIF and Pocket or yeah.
So you're saying if Bitcoin is moving and those aren't moving, you're suggesting that's a bull trap?
Yes. If Bitcoin is putting in a bottom and it's starting to move up, you want these meme coins to basically outrun it, outperform it. And that should also reflect in Solana. If that is not happening, then it's a trap. At least until third quarter is over.
Yeah. Well, I'm imagining it's some Star Wars meme. It's a trap. It's a trap. Everyone has to fly out, but that's probably dating me a little bit. Ahmed, I want to come back to you. What about those signals? Are those factoring into your thought process when you look at that? You just gave a really kind of clear cut view of looking at the price range. If it can hold the Monday lows, it can move up. It can go up to the 174. That's where you're trading. Are you looking at some of those other signals as well to maybe see if it's a bull trap?
A little bit of it, because I'm very clear on my ranges side. Because if the range Monday low is lost, I don't want to be in the trade. So,
Okay.
so it becomes much easier from that perspective. And then once the next range is formed, you see where you are within the range, and then I look at the order book. So I don't look at what else is happening around it. It's my decision making is mostly driven by what orders I'm seeing, what trades I'm seeing, and what the health of the order book looks like.
Sure. Okay. All right. Well, we've gone through 3 of them. Right now, it looks like everything is looking like there's a potential trade if they can hold on to their Monday lows. Let's talk a little bit about AAVE, because I know that got some attention last week with more from a whale perspective. But Ahmed, is that a token you're looking at? Are there other tokens that are further down the risk curve that have kind of caught your eye?
Yeah, AAVE is one of them, because it broke out from a very long term range it was trading in, and then we tried to capture some of the move. So I think JI took some of the trades there. Don't know why how it happened, but yeah, it broke out of that range, and then there were trades on it. And now what we are looking at is, again, across the market, what we are looking at is Monday ranges are lost. Once again, I think AAVE will retest 115. Once it retests, that will be a great area to trade if it can hold on to 115, because you can already see from 115 it will run up to 150.
So you're just looking for it to hold on to its existing range, and if it's able to do that, let's say through today, that may be another position that you would take?
Yeah.
How do you think about, on a personal level, obviously none of this is financial advice, but how are you thinking about allocating across these? Because each of these have obviously upside as you're seeing it. Bitcoin, as Benjamin just mentioned, is really the center point. So it's got to make its move first. Do you over allocate for that? Do you look to do a rotation? How do you think about that?
So the way we have done the allocation, or I have done the allocation specifically, is 40% is for BTC. You have another 20% for Sol, another 20% for Ethereum, and then for each of the memes, you have 5%.
So you're not doing a time-based allocation or a rotation.
No.
You really look at it more just an allocation of the overall trading portfolio.
Yeah.
Okay.
It's more from the risk perspective, because you don't want to go all in on one of the meme coins or a Popcat or a BIF, because it can have a significant drawdowns on your account. And you don't want that. Because it won't take long for AAVE to go at 25 down on 25% on 35% run. But you don't want that on your account. That's why you want an exposure to them, but yeah, not your entire account, because BTC is still king. When BTC moves, everything moves. So you want to have the allocation there, because the liquidity is there, spoofing is less. The games are there, but not to that extent.
Yeah, I mean, I think for anybody who's looking to allocate or set up their account, to think about the risk management side of it, I mean, I think the model that you have is an interesting one. There's obviously other ones as well, just from a rotation perspective. You could be looking at longer term timeframes. And definitely, I think the drawdown side of it. I remember the conversation we had with Kingfisher, the interview that's on the YouTube channel. If you haven't already, definitely check that out. Great discussion with those guys. But they talked about just trying to really do education for the market, where people are just really not using some of these risk management tools to really think about drawdowns. They kind of sort of accept them rather than look to be preventative and manage them. So, okay, I want to round trip this a little bit, Amit. Everything you've talked about, I really think is from a over the coming week. Is that correct?
Yeah.
Okay, so this is really trading over the coming week, which is fantastic. Do you go beyond that? I mentioned before when we were talking about Bitcoin, we've got the monthly close happening this week. We had a good close on the weekly on last week for Bitcoin, and then we'll be going into the quarterly close, I believe, next month. So how do you treat those periods? Like if we're coming into the monthly close for this week, do you look at that any differently, looking at statistical anomalies? So we have the ETF rotations that Benjamin mentioned last week as a potential that's going to change sort of the patterns that we're going to see for whales. You've got people positioning on an options market perspective. And I'm not asking you to look at all that information. I'm more asking from your perspective, how do you think about specific monthly closes, quarterly closes, weekly closes? Are some more significant? Do you just really start with Bitcoin and work backwards from that? How do you analyze that information?
That's my daily setup. That's how I start. I start with BTC and see which range we are in, or basically what ranges are been held or what ranges are been broken. So I generally, that's why I look at the Monday ranges very precisely. So if the Monday ranges are held going into the monthly end, right? Because either if it is very close to the Monday range, if it is happening on the Friday, I'm not touching the trade, because Friday generally crypto has lots of shenanigans that happen. So I try to stay away out of it. And that plays nicely with saying, let the market settle down over a couple of days. Come Monday, see what is left to trade, if there is any, and then start forming the ranges from there and start taking a trade. So if everything is happening on Monday, because that's why I don't take a trade on Monday and either on Fridays. So unless there is very specific condition that is happening, or where it's very obvious that's where it's going to go, I don't trade Fridays or Mondays.
And I'm assuming you don't trade on the weekends as well. You monitor
No,
the
not
markets.
at all. Not at all.
You have 3 days of trading in your life.
Yeah.
And the rest of it, I assume you're touching grass, drinking tea.
Yeah, rolling in the grass rather.
Yeah, that's right. Right, rolling in the Benjamins or the pounds, whichever you prefer. Okay, so that's where you're looking at really those periods, those sort of bookends for the Monday to Friday, really Monday through Friday. Friday through Monday. You have those 4 days in which the market really goes a little bit on call it a professional hiatus and really gets into degen territory. So if you're looking at those periods, what about from a quarterly close? And I apologize, maybe you mentioned this, but I missed it. Does that hold any significance to you? Because again, you usually have options expiry that happens during that time frame. Maybe you're having larger accounts or funds that are doing some kind of rotation. Does that matter to you or not?
It specifically from the options perspective, it does matter, but I don't look at it because don't understand options that very well. So what we do is basically we have a discussion within the team, and that's where the kind of a teamwork comes into play, where Benjamin comes in and says, okay, these money options are expiring, this might impact, or this is how dealers are positioning themselves, you need to watch out for these things. So that goes into the looking into the ranges, but that is not the only thing, because that is more a word of a caution. Okay, this is what dealers are doing, and you need to be aware of these things before you get into a range.
Very good to know. And I think this kind of plays into this idea of what information you get on Twitter. There's some great information. If you want to get into options trading, we have some options videos on our site. Obviously, the guys at Kingfisher talk a lot about that with the data that they share, so you can definitely go check them out. But if you're not going to be doing specific options trading, to Amit's point, it may be something you want to be aware of, but not be as focused on it, because it may not play into the alpha that you're able to use and actually generate profits.
Yeah.
Oh, good to know. Good to know. All right. Well, is there anything else that kind of caught your eye before we wrap up? Anything on the market that we didn't bring up?
I mean, I'm just looking at a few of these tokens, and like WIF and SAI specifically. I mean, see, these tokens, I mean, it just completely out of the context, right? This is not I'm saying we are taking a trade, just out of the context, saying these things are, these specifically tokens are run down so much, and there is so much of opportunities available now. I mean, if the market drops still, I mean, if looking at WIF, even if you have easily have a run up from 1.7 to 3 or 4. So there are trades to be had now. So even if the market looks completely crap, but still the market is shaping up to be basically will have a good run. And coming back to the point, what Benjamin was saying before, right? The rate cut might be a kind of a trap or a kind of a sell-off event. I think when what we saw in BTC, based on the announcement, this is the run-up we saw. So consider what will happen when the rate cuts will arrive. And this will, I think it will be very evident from this week's Friday data, that job loss data is going to come in, because that will drive the discussion, how much or what will be the size of the rate cuts.
Mhm,
So
mhm.
I think, yeah.
Yeah. And without doing too much of the analysis on that, it's really just being able to execute around any changes that would happen in the market, being quick on your feet, so to speak.
Yeah.
Right. For whatever information comes out. Okay. Well, Ahmed, thanks for showing the ranges that you're looking at. Obviously, some really interesting plays coming up just in this week alone. Every week we'll be bringing you back, talking about those ranges. Hopefully, get some even other tokens that you may be interested in. See if there's some other ranges. And with that, we're going to wrap up today's show. Hopefully, you're enjoying this new format that we're trying out, really trying to give a perspective from whales and those macro movements going all the way down to range trades that Amit's focused on, and that he has been focused on for a long time. If you haven't already, definitely check out the Exchanging Good handle. This is where we're releasing these shows every Tuesday. We've gone from a Thursday show to a Tuesday show. Works out really nicely after the Monday price action to give us something to look at the week ahead. And you can find these episodes on the YouTube channel. So if you haven't already, I would subscribe over there. We have all the content we've been doing for over a year. Plus, we've got interviews that are going to be coming out there and some other shows that I'm going to be working on with Ben Lilly. So definitely check that out. You're not going to want to miss some of those discussions, some interesting perspectives on investing. And the last point I'll say before we actually drop off, we've got the JAI bot, which we talked about earlier today. We've already shared some of the information that it's giving, some of the signals that it's giving, sometimes counterproductive to some of the information we're sharing, but often has a really, really great hit rate. If you're interested in trying to use that to do automated execution for your account, check out the link. I have it here in X, in the actual, I guess, the chat room, and we'll be sure to load that in as well on the YouTube description. Check that out. Just a really great way to add to your trading arsenal. But I want to thank Benjamin and Amit for dropping by the studio today. Love having you guys here. Look forward to chatting with you guys next Tuesday. And with that, I'll leave you with the the same PSA I do every time. Have some dry powder. You're always going to want to have some on hand. You never know when those opportunities are coming around. This is Marconi White signing off.